Good morning, traders. This is Chris Butts with Traders Profit Compass with a morning look at markets for Wednesday, August 19th. I'm going to run through the indexes, then take a look at the FAAMG 60-minute charts, then look at bonds and gold. So let's get started. Here's a 4-hour chart of SPY. As we've been noting lately, we've been in this nice channel coming off the lows in March and April. Been working our way up. We started in the top half of the channel. Now we've dropped down into the lower half. And you can see that even though we've reached new highs, the move is diminishing. I mean, these candles have turned into pinpricks. You can see, back in this section, I mean, just the size of the candles tell you that, price is moving, things are happening. Here it's been just an incremental, melt up almost. And now we've, I can't say we've stalled because we make, a little bit of progress each day, but you can see the momentum is coming out. We do have these bearish divergences present in both the RSI and the PPO. But all that said, no sell signals. So I think we've got to trust price, even though it's not giving us everything we want to see, with bold moves higher. We don't have any sell signals, so we got to stick with it. If price were to drop down, say below 335 and into this zone below the channel, then we've got to sit taller and pay a lot closer attention to see if it's just a dip or the beginning of a pullback or trend reversal. So as it stands now, we're at the highs, no natural sellers above. I think we've got to trust price and see where it takes us. Here's a 30-minute chart for active traders. Yesterday, there was a gap higher, and then a flash backfill of this not only the opening gap, but the gap left behind from Monday, and that was really a gift. I mean, if you had your levels handy and you were on top of it, price gave you 2 bars to buy right here at this 336.84 level. Call it 337. And that was good for $2 by the end of the day. So we've broken above this 338 level, and now I think you can move stops up and strikes up and have this be, your reference level going forward until we establish a new level of support. So move your stops up and your strikes if you were long from lower levels, and stay long. No reason to do anything other than that unless we were to break back below 338 and then come back down here. So today I'll be taking out this gap. I'll eliminate it from the chart and take it from there. Moving on to the Qs. Another 4-hour channel. Unlike SPY, this one's moving with a lot more authority. Getting nice gains as the growth trade picks back up again. Something to keep an eye on is this midpoint line of the channel, and you can see that when price is in the top of the channel, it tends to act as support. You will get checkbacks to the bottom of the channel, and it pops back up. Check back, pop back up. check back, didn't make it this time, was rejected. If price can pop above this midpoint of the channel, really good chance to go up and tag the top of the channel up here. I don't have that marked as a number, but it looks like about 295, possibly 300. And then look for this line, the midpoint, to act as support if this rally can keep going. Cautionary moves would be moves below the channel, back below 270. Then we've got to be on our toes for a deeper pullback or a reversal. Just like SPY, we've got declining momentum, which is a bearish divergence, not a sell signal, just cautionary. And like all the other markets, there's tons of yellow flags out there, but price talks, and price has not given us anything close to a sell signal. So paying attention to these is fine, but you can't get sidetracked from the main thing, which is watching price. And price is in a clear uptrend, not even close to breaking trend. So again, stay long, stay with it, trust price. You don't have to go crazy, overextended, over levered, but certainly long enough to participate in this uptrend while we've got it. 30-minute chart, again, yesterday, golden opportunity for a nimble trader on this back test of 274.64. Price gave you 2 bars to buy, and by the end of the day, that was worth $3. And, if you're an active trader and you missed that, you could have still bought, on a breakout above this candle, at 276.50, and that still would have been good for, $1.50. So if you get in a situation where, oh damn, I missed the entry, keep your wits about you. Look for the next objective level and take it from there. So, while everybody would have liked to get this, if you didn't, there's still opportunity left in the day. So don't let, one little head fake or missed opportunity derail your whole day. Stay focused, look for your next objective level, and take it from there. Okay, so here I've dropped in this little uptrend line. It's probably not the greatest line in the world. It's only got a couple reactions here, but still I think it's a good reference point if you're long, to get concerned if you were to drop below. I think in reality anything above 276.50 is a good long. If price were to drop below that, we're coming back here to 275. And then, of course, if that level breaks, we'll come back and test this gap. So just keep trading level to level. There's no natural sellers above. So keep that in mind also. Keep a long bias. And just know where your exits are. And if you were long from lower levels, I would ratchet up all your stops and your strikes to this 276.50. I think that's a new reference level for us to shoot against on the long side. IWM has gone flat. I think traders are trying to figure out if this great rotation to value is dead or just on pause, because we got a bold move up to 160. It has backed off and consolidated. This 156.50 had been support. Yesterday we dropped below, so now it's resistance. So we made that first initial move and then almost, nothing the rest of the day. So from a technical standpoint, a move down here to 155 is favored because this is resistance and this is support. So favoring a move down to 155 and then, will be another decision point. All that said, it wouldn't take much to pop this above and then make a little baby run to 157.50. If it were to break above that, I think it's a good long and see if we can get back up to 160. And for my money, if the value trade is truly alive and if the great rotation continues, you would see some weakness in the FAANG and you would see some strength in these cyclicals that would push IWM over 160. As long as IWM is down here and languishing, doing nothing, I think you got to be, favoring the tech and the growth stocks over value. I took a quick look at the banks. They look terrible. They've given back a lot of what they gained, the last week or so. So for now, at least, IWM is not really where the action is. You can see just like nothing has happened for the last week. So if you're an active trader, yes, you can alarm these levels and look to pick up $1 here or there. But I think the real movement is in the Qs or in your FAANG stocks for active traders. Moving on to FAANG, I did a quick look. This area here on Facebook, and I don't have it penciled in, but is, a dramatic Bollinger Band contraction where volatility gets really compressed. And you can view this as a spring compressing. You can see it, the volatility getting less and less and less. This thing is going to explode one way or another. The volatility contraction doesn't give you a directional bias. It just tells you that the spring is really, really compressed. Yesterday on this candle, I thought it was just gonna explode, and they ended up pulling it back before the close. But watch this really closely because it's on a hair trigger, and if it were to pop this 266.60, I would really lean into that long. I think it's a great level to shoot against, and you might get a pop here to 280, given the compression and volatility. And looking at the other side, if something were to happen on the broad market indexes, this thing, may make a flash run back to 250. I really think that this compression is going to, portend a $15 or $20 move. So be ready for that. And I would frown upon trying to front run it or guess it. It's impossible to guess which way it's going to go. Just wait for the break. Pick a spot to shoot against. If you wanted to bring this level down a little to 264 and say if it clears that, give it a shot. Or if it drops below 258, give it a shot. Just pick some lines, set a stop, and go with it. Because I think once volatility expands, it's really going to go in one direction or another. On Apple, these levels have been just working out so well. Right now, we got that break above 455. We got to move up to 465. So we've been consolidating in this $10 range. If you get a pop above 465, I think you can take it long and look for 475. So, as we've always talked about, if you're in a $10 box and you break out, the measured move is $10. So anything above 465, get long and look for 475. If price were to, for some reason, break down below 455, I think it's going to come back in here and test this 443 area again. But I think the bias needs to be on the high side. It hasn't given us any reason to doubt where it may consolidate here some more today or break out. We'll just have to wait and see. But certainly have 465 alarmed in your system for a breakout. Amazon. I mean, look at it, guys. We had all these levels. We said above 3,200 favored 3,250, and above 3,250 favored 33.35. Okay, so you're sitting here, you don't have a position. Maybe you missed this $50 move. Okay? Keep your head on your shoulders, keep your wits about you. Buy the breakout above 3,250, and that was good for what? $80-something? Something like that? $80 for the rest of the day. That's a great trade. Yeah, it would have been great to buy the open, but if you didn't do that or couldn't do that and picked it up right here, that's still a great trade. Now, going forward, this 33.35 was a prior high, and if you look back to a daily chart, I think if you break this level, you're looking at 3,600. I think that's the measured move target that I had calculated a while back from a big consolidation area. So you may get some resistance here. You may even get a check back to this 3240 level. Be ready for anything, but right here at 33.35 is your objective level. And if you get a break above, I think it should be bought. And if you were long from down here and you held, I think it's a place to ratchet up your stops and move up your strikes, book some of that gain, and stay long. Microsoft made a move here above 211. I am looking for a move here to 215. I got long yesterday in the afternoon after it broke this 211. So I'm long, looking for 215 with a stop just below 211, leaning on these levels for guidance. I think now that it's broken out, the odds are better for higher, and that's what I'm looking for. Google, again, in the trading room yesterday afternoon, I was telling the guys, price is making a move here to this 1538. If it breaks above, it's got room to run, and that's exactly what happened. Put on $20, in 2 candles, in 2 hours. So if you can hone in on these, key levels and, pick your spots, getting long on this breakout with a stop just below is very objective. And, they don't always work like this, but in this case it did. So that's all you can do is take your shots at objective levels and see what happens. So right now, not a ton of resistance till we get up here in the 1575 range. So if you held it overnight, I think you can set a stop just below and see if you get one more push today, and maybe get another 10 or 15 or 20 bucks today up into this 1575 area. Okay, moving on to bonds. I think we're at a really interesting spot. We had this big impulsive move down off the top of the channel, so the low yield of about 50 basis points was rejected, and they went the other way, bringing yield up and price down. Came into this 163 area where it found some support, and now it's kicked back to right around 165. Okay. This move was basically, uncorrected. And now we're getting a little bit of a bounce or corrective action. I dropped in the fib retracements. And what I'm looking for just on a technical basis is if price moves above 165, I think you can get long and look for a move back up to between 166.75 and 167.50. I would favor this move here up to the 50% retracement. There's a natural line of technical resistance there, right at 167.50. I would favor that move as a corrective move to this move here. And then we'd have a decision to make whether to close out and flip short for a halfback short entry, or to stay long and see if we come back here to 169, which would be the 61.8 retracement level. But that's in the future, but that's kind of what I'm envisioning. The key, of course, is right here at this 165. I think if price pops 165, you can get long with a stop below and just see how high the bounce can go. So I think that's a real objective level to shoot against. Moving on to gold. We got the big breakdown. We had some consolidation. And then a couple days ago, it broke above this 184, which was an objective level to get long for a potential backfill. And that's largely what we got. We didn't quite touch 190, which was the level of the breakdown, but we got pretty close. A lot of people think that this is just the beginning of of a new leg higher. I don't. I think this was a purely technical move to backfill this gap, and I think it's going to have a real tough time at 190 to break through. I think it's coming back, and I think it's coming back towards this, this prior low here at 179. We've got technical support here at 177. That's what I'm looking for. I thought it was real interesting yesterday that gold was up and the miners were down. Gold was up about 1% and miners were down about 1%. And maybe that's a tell. Don't know for sure, but I believe that this was just a technical move, backfill the gap, back test broken support for a move back down. And that's what I would be positioning for. If you were good enough or lucky enough to get long here for that gap fill, make sure you get paid, especially if you see a rejection here. And I think that's a very objective level to start layering in a short with a stop just above. Now, if I'm completely wrong and price pops 190, I think you can buy it with a stop just below and look for 194. That's certainly within the realm of possibility. But like I said, that's not my main favored scenario. I think it's going to come back first. And, I'd be a motivated buyer of gold if it got back in this 177 range. I think that would be a good buy. And if it got back to 170, I think it would be a great buy. So we'll see where it goes. But right now I'm favoring a move back to back towards the prior lows for starters, down in this 181, 179 area. So, okay, that wraps it up for the morning look at markets. This has been Chris Buss with Traders Profit Compass. If you like the content, please give me a thumbs up. I'd really appreciate that. And certainly subscribe to the channel. I'll try to keep timely content coming your way. And if you look over in the show notes, there's links to the blog where you'll find a lot of interesting and useful information for aspiring traders at all levels, and a place to register for my content where you'll get everything I publish delivered right to your inbox each and every day. Again, this has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you soon.